Welcome to my channel. This is Mario Lloyd, also known as Real Estate Guru PK. On this channel, we talk about my real estate endeavors. We also have the top real estate producers and the top entrepreneurs in the country. Be sure to click the link below with Justin P with his Support Black Colleges marketing course. Also with Jason White's Crack the Code affiliate link, click that below as well. Also to support the channel, Webull, M1 Finance, Chase, Discover, Robinhood, and Public, a stock trading app. We hope you enjoyed this episode. This is Real Estate Guru PK signing out. How y'all doing? Welcome to another episode. We got a special guest. We got a couple of them. I'm gonna let y'all introduce yourselves. We got my man Lawrence.
What's up, y'all? My name is Ivan Lee, CEO, co-founder of Optimized Funnels AI, 1/4 of the collective.
Peace, family. Coach Jamil, 1/4 of the collective, founder of Asymmetry Trading.
Hey, what's going on, guys? Santino, the only option, founder of Wise Money Academy, 1/4 of the collective.
And all that adds up to 4/4.
So how'd y'all come together with the collectives?
Yeah, so we pretty much was on Clubhouse. It was really in 2020. First I met Jamil. I was running a morning room with him and a couple other of our counterparts. Shout out to Issa. And I was listening to Jamil. He sounded completely different than anyone I had been online with at the time. Originally, I started teaching and trading and investing in 2016, 2017. Jamil having a JP Morgan background and just his intellect, the way he spoke about charts, I just immediately kind of I was like, all right, this guy's in a different league, different class. And so then pulled him to the side. We just started exchange numbers, started having conversations. And then it went from there. Then I met Santino. Me and Santino met on Clubhouse, heard his story. I was like, yo, this is dope. Me and him pretty much started around similar times when it came to investing and trading. And I just liked the way that he spoke and taught. And then I met Ivan. I met Ivan through a mutual friend. We had a connection with our friend Jay. And then ultimately, me and Ivan's relationship blossomed. Ivan was pretty much like a number one supporter. Any room that I had, anything that I had going on, Ivan was there. And then we just started having conversations collectively, met Santino in New York, ended up meeting Jamil finally in person in real life, and then linked up with Ivan in Atlanta. And I just feel like everything that we've done, we all come from the same mission of trying to really educate and empower people, but we actually do what we say we do. Right. And that's the difference between us and a lot of people that are online. Right. A lot of times people are just talking about, oh, I did this, I did that. But all three of us, we trade for a living. And Ivan's been in web development, right, for 15 plus years, right? E-commerce for 15 plus years. So he has the experience, right? And we had the experience of actually trading for a living. So that's what separates us. So that's how the collective pretty much got started.
Okay. So y'all in Houston for the summit, correct?
Yeah, we're here in Houston for 2 days. We just actually flew in last night from LA. We decided to really do a tour. We feel like it's good to come to different cities to really start teaching people. Like, we love the hands-on experience. Like, it's different when you're on a Zoom. Like, a lot of people can give a lot of fluff on a Zoom. Like, I could be on a Zoom dressed nice, have a suit on, have 1,000 people on, and I could be saying something that sounds credible or valid, but does that really help people? Right? Nah, like, we want to actually get out in front of people and help people tangibly right in front of their face, because, we just came from LA. We had a young lady, she was sitting in the front row and saying, yo, y'all saved my life. Right? Like, stuff like that touches us. So we're very, accessible to people. We don't turn people away, because people come outside of maybe markets or web development to us and just to talk about life. And I think that's something that we take very seriously.
All right, so what kind of trading do you do? Is it like swing trading, day trading, or all the above? So
all the above. I first started off as a long-term investor. That's always my thing. I'm a long-term investor first. I use trading for income, and I use trading to hedge my overall portfolio. So my thing is that when it comes to like trading and investing, a lot of times people try to hop into trading first and like, oh, I'm gonna be this trader, think that it's easy. For me, it took time. I started my journey in 2016, just started being a long-term investor, invested in shares of companies, top ETFs. And then I transitioned into the options world pretty much the late 2017, early 2018. And I took that on. And I now sell options on my overall portfolio. I'm also a day trader as well, but I primarily really like to swing trade. I like to hold positions for a few weeks to a month, get a 3 to 6 month out option, allow that option to work in my favor. I'm big when it comes to economics. So economics is huge for me because economics gives you opportunity to see what's going to happen next. So if you combine economics plus the charts, which my brother right here is a specialist with, you really give yourself an edge.
Okay, so the options. I've looked at options. Options are, to me, seem pretty complicated. Like, are you doing options for income or are options just to cover your positions?
So for both, great question. So I do options to cover my positions, but also for income. So one thing, like for me, is like if I can sell options, right? Let me break down exactly what that is. So if I own 100 shares of a company, that's equivalent to like one door of real estate, right? So every 100 shares that I own, 100 shares is one door, 200 shares are two doors, 300 shares are three doors. I then am able to sell an option contract on that specific company, right? The price of that option may range depending on the company. It may be $200 an option, or maybe $1,000 an option for a more expensive company. But if I'm able to sell, we'll just take the median price right there. We'll take 600. If I'm able to have 3 options that I sold for 600, that's $1,800. If I do that every single week, 1,800 times 4, that's $7,200 a month, right? $7,200 a month probably is able to cover most people's expenses who are probably not living over their means, right? So for me, it's about showing people a different way to be able to use options to generate income. Or I can hop on the buy side of options, which me and him do, me and Santino, and I could understand where price is going from the charts. So I'm able to see, okay, I believe that Tesla's going to go up from 122 to 136. I'm going to buy a call option. Every dollar that stock goes up, the value of my option increases and I can sell that for a gain. So it's a mix. I think it's good for people to know all facets because what might have worked last year may not work this year. So it's always good to be versatile. So that's my opinion.
You buy the big ones, the S&P 500s and stuff like that, as far as like your overall portfolio?
So I'm big as far as, yes, investing into, I like to invest in the QQQ, preferably. I do own the TQQQ as well. So the QQQ and the TQQQ are two of the biggest ETFs that I own. I also like the VOO and VTI. Those are two.
See, that sounds very complicated. You just know symbols and stuff like that. So those are like the SPYs.
So the Vanguard Total Stock Market Index. So it's all the holdings are very similar to the S&P 500.
Okay, I got
Standard
you.
Poor's 500 Index.
Gotcha.
Right. So all those holdings are pretty much similar. Because in the S&P 500, the top 2 companies are Apple and Microsoft. Right, the NASDAQ top 2 companies are as well Apple and Microsoft, right? But the NASDAQ is made up of 100 companies, right? Mainly tech. Where the S&P 500 is mixed of, you got healthcare in there, you got real estate, you got financials, you got everything that's kind of in there from a one folk consumer discretionary, right? So you got a lot of different things in the S&P 500. It's the world's market, right? The S&P 500. So I primarily use the SPY from a trading tool. And he's someone, Jamil, he could talk about that a little bit later about how he uses the SPY on a day-to-day basis to print money from the market. But that's primarily, our focus and what I really predicate myself onto.
Any Forex?
I don't trade any Forex at all.
Anybody ever trade any Forex?
I have traded Forex. It's a market that I traded very briefly, because of the deregulation of the market, and just the fact that when I started trading Forex, there was multiple brokers, U.S. based brokers like TradeStation, FXCM that you could trade on. And all of those brokers are no longer or they're not participating. They're not allowing U.S. residents to trade the Forex market. Yeah, like TradeStation, you can still trade equities, you can still trade futures, but you can no longer trade the Forex. FXCM, it was UK based, but you can no longer trade. You could trade Oanda and I think MetaTrader, but it's a deregulated market, meaning like there is no central exchange. If you're trading on with your broker with Oanda, you're getting a totally different bid and ask price than if I'm trading on a different platform. It's deregulated. It's not centralized.
It's the wild wild west.
Yes, it is. It's a large market. Everybody talks about it's $1 trillion.
Yeah.
It's $1 trillion market, and
But it's
all you need to do is
super
get a piece.
manipulated.
But you're talking about governments, institutions, companies. Obviously, IBM. They have operations. Microsoft. They have operations overseas, right? So they have to be able to trade USD to pay their for all their expenses, their labor, everything. Everyone is exchanging currency.
I did it like 20 years ago. First thing I got, 20 years ago, and it was super manipulated.
Yep.
The thing I didn't understand with it that I understand now is leverage.
Leverage, yeah.
Like if you had $1,000, you can control $100,000.
Correct.
But if the market moves just a couple of percent against you, you lose everything. Which I didn't understand that. I put my money. I had like $2,000 in there. I was doing good for a half a second. 2 minutes later, lost my $2,000 because I didn't understand leverage.
Yeah.
So now I understand it way more. You know what I'm saying? But it was a good learning experience.
All of the assets we're trading that we're talking about trading options.
Yeah.
We haven't talked about futures yet.
Yeah.
Are highly leveraged assets, which like you just said, using less capital to control more capital.
Mm-hmm.
But if you understood, I don't know if you were trading your micros or if you was trading
No,
standards.
I was
like that.
standard. I was, like I said, controlling $1,000. You know how you put it in there and you put your $1,000 and it automatically set to leverage 10 to 1.
10 to 1.
Yes.
Or 100 to 1 or whatever. Yeah. So I didn't figure that, but at the end of the game, I ended up making some money, but I got a lot of gray hairs from it. So, you know what I'm saying? And I got out of the market because it was just so hard just to win in that market. You know what I'm saying?
Most challenging markets to
Yeah.
trade.
Yeah.
Absolutely.
Yeah. Do y'all trade crypto?
So I'm really big as far as like long-term investing in crypto, but it moves in cycles, right? So for me, it's like I learned a lot from 2016, seeing,
2016.
Yeah, 2016.
All right.
So like anytime Bitcoin and Ethereum run, it's like crypto is really easy to understand because it's all about really what's popular and what's hot, right? It's super trendy, right? It goes into a trend and then it comes out of a trend, right? So if you look at it, Bitcoin hit 20,000 in 2017, right? And then it came all the way back down to 4,000, but it traded sideways for about 2.5 years. Then it went from 4,000 to $68,000.
Yeah.
So my point that I'm trying to make is even over the past week here, everyone said crypto's dead, Bitcoin's dead, Ethereum's dead. Bitcoin went from 15,000 to 22,000. I don't see anybody talking about it.
Yeah.
That's almost a 50% jump. Pretty much like that.
Yeah.
So the point that I'm making is that, it goes in tandem with the stock market, right? It goes directly in tandem with the stock market. A lot of people say, well, the cryptocurrency market and the stock market don't move together. Well, last time I checked, there was growth stocks that was down 70, 80, 90% last year.
Yeah.
The same way Bitcoin and Ethereum were down 70, 80% last year. Bitcoin also has something in its structure, what you talk about is Bitcoin halving. So that happens every 4 years.
Yeah.
So Bitcoin is simple. It's really just basic supply and demand.
2024, 2025 is the time that we're waiting for.
Exactly. So you'll see supply become less. And so if demand comes in, anytime supply drops and demand comes in heavy, what happens to price in any market? Shoes, Jordans, cars, right? We just see what happened with cars, right? Everyone was getting cars, right? Over the past 2 years, right? Like that. Interest rates went up. So the cost of getting a vehicle became more expensive. So the cost of getting a vehicle becomes more expensive. That means the qualifications start to become more extraneous, right? People need to. Right now, we had the most people paying $1,000 car notes ever, but then we also had the most people delinquent on those car notes as well too. So think about that. Now you're seeing price cuts. Tesla just cut the Model Y, wasn't it 20% last Friday? Then you're seeing 4x4s down $10,000-$15,000. So I mean, it's like any market is going to always deal with supply and demand.
I always look at as like interest rates control everything, and interest rates are inverse to like growth, right? So interest rates go up, growth goes down.
Correct.
So That's like the base. So I was telling you about that as far as like the housing and real estate. And real estate, I don't think it's been hit as hard as like stocks.
Certain areas, but definitely not. You haven't seen no real estate market fall 70-80%.
No. It's a lot slow.
It's been contractions like 10, 15, 20% haircuts.
It takes.
Doing good.
So what? Yeah, I mean, it takes longer. I think real estate is. It's like being on the track and a train coming. You can see it coming.
Yeah.
Whereas other markets will just get hit.
Yeah, you just get
train
wrecked.
Exactly.
It's all about the rate of speed in which you make money off of it, right? Real estate is a slow market.
Yeah.
You know, certain stocks are, could be considered
liquidity.
So the faster they make profit, the faster they're going to take it. You'll notice like your AT&Ts and IBMs, they're not really getting hit as much because those are things that they don't make a whole lot of money on anyway. Those are safe bets.
Yeah.
So when you talk about the real estate market, it's a slow grind. So, 2008, that was pretty much an anomaly for everybody because of, the whole situation with the credit default swaps and all of that stuff. So, but now we can't expect that same drop in the real estate from 2008 just because the market's coming down.
Exactly.
Yeah.
It would have to be what they call a systemic economic problem.
Exactly.
Right? Meaning it affect all areas of finance.
Yep.
And it hasn't gotten to that point yet.
What about, so like I said, to me, everything revolves around interest rates. Right now we're sitting at like 6-7%, right? For real estate. I don't know.
Yeah, about 6-7%.
Yeah. So, the highest that interest rates have been that people talk about is in 1981, where I think it was like 16 to 20%.
Correct.
Now that's going to kill. I think that's going to kill if it ever got that way again.
Because they had to, if you look back at the Federal Reserve, what they did back in those early times, the Federal Reserve actually took interest rates up to 20%, like the federal funds rate. Right now, the federal funds rate is right around 5%, right? We're right here near 5%. We have the next Federal Reserve interest rate decision February 1st. Then after that, you have the next one March 14th. So, when it comes to how the Fed raises interest rates, I don't see them raising it to 15% or 20%.
The thing about it, like 2 years ago, it was like 2.3%, and now it's already doubled so fast. And a lot of people are just like, a lot of mortgage companies are like, what the hell happened? Everybody was refinancing. Mortgage companies were making so much money. All of a sudden, they raised like 2 or 3 points.
Because, inflation was soaring. So if you take a look at the inflation numbers, we get the CPI reports from an economic standpoint. We hit 9.1%, right? 9.1% in July of 2022, right? Inflation was soaring, right? Because everyone was spending and splurging and money was easy. So the Fed had to raise interest rates. They probably raised interest rates a little bit too late, right? They definitely could have raised quicker. But like you said, interest rates matter for everything. When interest rates get raised, that's why people are losing their jobs right now. Microsoft announced 10,000 people is going to be sent home within this first quarter, right? And it's unfortunate. But layoffs happen to actually make companies run more efficiently, right? You had companies like Elon Musk is showing you something right now. Twitter is operating right just fine. He sent 75% of the staff home. You use Twitter, right? Has Twitter been any different? Ask yourself that question.
Yeah.
So what's happening right now is it's being exposed, and that's where my boy Ivan comes in, is where you could talk about the AI. Would you touch on a little bit, bro, what's happening now, the shift that we're going through from a technology standpoint, and how it can allow companies to operate at a higher efficiency level?
Yeah, it's like, they always say robots are coming to take over your job. Well, artificial intelligence, technology, the more capable we become with it, and the more they incorporate these into these other businesses, the less human input they really need. For example, we got with artificial intelligence, just being a web developer, we can use AI to do the job of 10 different developers, whereas we would have to hire 10 different developers to build a platform that, the type of platforms that we build now. We can cut that out just using artificial intelligence. And so, Elon Musk, he's a really smart guy. He's one of the original investors in OpenAI. So he knows all this stuff. He sees where it's trending. So that's where he had the comfort of, okay, you guys want to stay home. You don't want to come to work. That's cool. Stay home. He just needs a couple guys, the people who really know how to use, the people who really know how to leverage AI and leverage technology. They can get a lot more done. And it's also a little bit more streamlined. Now you have less meetings. You have less processes, less arguments amongst humans, less imperfections amongst humans, right? Because when you start leveraging technology, it just works. So yeah.
You feel like he's going to turn around Twitter like completely? Like he's going to build that growth with the company? Because they're like they're in debt.
Yeah, he's gonna try. He's gonna try. He's a smart man. Like it's hard for me to bet against Elon. I mean, the man's building rockets.
Do you think he should have paid $44 billion for Twitter? I was like,
I would say that from a price to earnings standpoint, he probably should have paid about 20.
And I mean, and when he got it, the whole market dropped, so it was probably worth like 20 or 10.
So to be real with you, the price did drop to like 30, 33. And I would say that
you made 33 billion.
No, I'm saying like the price price of Twitter shares dropped to 30, 33. The reason, part of the reason he had to buy it at 44 is because it was his tweets at the time back in April where he was saying, "Hey, I'm gonna buy Twitter." So they forced him to buy it at that point that he was saying. Technically, he could have really got it for about $30 billion.
What would you have done? Wouldn't you just got sued for $1 billion, gave him $1 billion, and went about your way? Would you have taken that hit of paying I think $12 billion more than what it's worth?
He sold stocks. From what I've heard.
Yeah. So let's explain it. So he did sell shares from Tesla. He had to buy Twitter. He did also take a loan against his Tesla shares, which he has to pay interest on that loan. His first payment is due, I believe, the 28th, if I'm not mistaken. His first payment is due on that loan.
To me, this is outrageous. So go ahead.
I agree. So I agreed. He put himself, but this is a classic case of Elon ran his mouth too much.
Okay.
Right. So when you run your mouth, you end up getting into trouble. So he's like Skip Bayless here, right? Where he ran his mouth a little bit too much and got himself into trouble. So that's really what happened.
Yeah.
But doesn't he have a bigger plan though?
I just think that
I heard it's data, but go ahead.
Yeah, definitely. His macro. Is just acquiring data. For this AI.
Yeah.
Again, I'm definitely not an expert in that subject matter on AI, but I do know that he's just about acquiring data so that it can enhancements.
And that's a lot of data. You think Twitter, think of all the human input, all the different, writing patterns and just built up over the years. Twitter is one of the most longest running social media platforms, right? Before Facebook, before Instagram, if I'm correct. But that's a lot of data for the AI to be able to program itself on. And he's really big into that. So it's like, you're right, being able to mix what they've done with Twitter, all the human interaction that you have with Twitter, and then morph that into Tesla, morph that into your other products. Like, there's a lot of opportunity in there.
Going into the machine learning aspect of it as well, correct?
Yeah, 100%.
Is he going to end up on top though? Like, what do y'all think? Is he gonna turn Twitter around?
I don't think it's really more so about is he gonna turn Twitter around. I think it's more so about what does he expose more so to the world. Because I think even right now with him, even to the point I made earlier, right, him sending home majority of the workforce and that company's still running properly, right, is what you're seeing right now. Think about since Elon sent those people home, let's take a look at all the layoffs that have happened. Salesforce laid off people. Apple's laid off people, sent people home. Meta Platforms has sent more people home. Microsoft just sent another 10,000 people home today. But think about this. Microsoft just invested last week $10 billion into OpenAI, ChatGPT. But then this week they sent home 10,000 people.
It's like when they talk about the NFL, it's a copycat league, right? Like, you don't think Tim Cook is seeing Elon reducing his staff by 75%? The investors behind Apple, the board, they're not seeing that, right? So now if you could run this business 75% leaner, then why can't we run our business 75% leaner? It turns.
And what's one of the most expensive? What's one of the biggest expenses for any company? It's labor.
Well, and so then you see Twitter leaning into AI. You see Microsoft making this investment, leaning into AI. You see all these other companies cutting down their work staff, upgrading their technical capabilities. So it just becomes a race between that, like who can scale the most efficiently.
Who can scale and do it the best, right? Like back to your point about profitability. I don't believe that Twitter is definitely going to be more profitable than Apple, but they're going to look at that blueprint and say, hey, we might not send 75%, but we may say send 25%. and figure something out. So that's kind of where, we're kind of leading to.
See, but think about what happens, right? Reason why growth stocks go down when interest rates go up because there's no more money for research and development, right?
Yeah.
So, like Jamil just said, the cost of labor becomes their most expense. But we talking about tech companies.
Yeah.
Do they really need you? You see what I'm saying? Or can they find 5 people to do 50 people job like he just said? So at the end of the day, if we got interest rates up, right, and they're worried about growth, the first thing that they can do to put a Band-Aid on that wound is to cut people and put that, like he said, they cut people and then spent $10 billion on ChatGPT.
Yeah.
So, but at the same time, while they're cutting people, everybody's pockets aren't the same. While they're cutting people, Netflix is building a 300-acre facility in New Jersey right now where they're going to hire 1,000 people. You see what I'm saying? So everybody's pockets is different, interests is different. I never thought Elon brought Twitter because he thought it was a good business.
Yeah, me either.
Because I'm a studier of Elon. I've been a Tesla enthusiast. That's probably the first stock that I cared about, right? And it just don't line up to me for his background, what he does. He's more tech than he is business. And I just didn't see that as a good business move. I see how it could be a great tech move, and somebody like Ivan could probably put it in more perspective. But I can see how it could be a great tech move from data standpoint. Who knows what he got going on with these cars? That guy, he could have something going on now. Like we think these tunnels ain't almost done. Those tunnels are almost done. I just seen it on YouTube. We got people in the actual tunnels now. So he's real secretive about what he do, and he's impulsive, so he may shoot a tweet out there. Like Lawrence said, he get himself in some trouble.
Yeah.
But man, I never thought it was for that reason.
Do you really think Elon is the mastermind behind all this stuff, or is he just a henchman, or is he just
I think
a minion?
I think no one is ever truly the mastermind behind everything.
Wasn't he the richest man in the world at one time?
Yeah, he was.
Do you think he was actually the richest man, or you think he's like a puppet?
Well, let's be real. There's some rich people that aren't documented.
Okay. Yeah. All right.
Yeah, that's what I was about to say. So I there's some people he was the richest person that was documented. But there's definitely people richer.
All right, there you go.
So I just think that overall, like when it comes to Elon, I just think that he's a character, right? And I said the same thing with Donald Trump, right? Everyone was mad about the things Donald Trump was saying, but they weren't focused on the people behind closed doors that was really pulling the strings. Donald Trump was the character that you could get mad at. Oh man, he just stepped to the podium and said this ridiculous stuff. Meanwhile, all this stuff is going on, being passed in legislation. You're not even focused on that. You're like you said, there's always someone that's like the puppet master, right? So I look at people like Elon Musk, yes, and I look at people like Donald Trump as just the puppets.
Have you know what's going on in Davos about the World Economic Forum and all these tech people meeting and stuff like that, and discussing the future and all this other stuff that's going on? I think it's this weekend.
It's in the Alps.
Their main thing is currency. That's what them economic forums are getting together now. They're trying to figure out when this market come back. They looking at it like Lawrence said about if the market comes back.
Well, I mean, they're talking about digital currency. Everything that you're talking about, everything becoming more digital. That's the main idea that I see. The singularity, everything becoming digital, tracking everything you do, people becoming machines.
And it's been that way for a minute now. Like when you take a look, even when I first got into this, like in 2016, I studied world economics. They were having these economic forums in 2015, 2016, talking about digital currency, but they were telling you on CNN not to buy Bitcoin.
Exactly.
Right? So all of this is part of, like you said, like even that to the point I made before about Donald Trump saying stuff and people being distracted.
Yeah,
he was saying stuff, but then stuff in Congress was being passed about digital dollars, right? But everyone's focused on what's happening with the president and what's up with Joe Biden's documents being left in the car seat. Like everyone's distracted on these stuff, but we're not focusing on the things that are right in front of your face.
You don't hear anything about Mark Zuckerberg's Lyra anymore. That was going to be his currency. They blocked him because he got access to 4.5 billion people across the world, 6 billion people, whatever their numbers are these days.
That is interesting. I kind of forgot about that too, about the Zuckerberg thing. I did feel like it was kind of a distraction, especially when it just kind of went away. But I was like, yeah, you just brought that to my head about he was trying to make his own.
So anytime someone tries to become anytime someone tries to like take over, like it has too much power, one person having to like, that's the reason why Mark Zuckerberg, his stock is dropped as much as it is because of the influence.
Y'all asked you about Facebook.
Yeah, like Meta platforms. I mean, look at the influence. It's servicing the entire world, and he has Ivan talked about data. All that data, right? And then you take a look at Elon. He ascended to becoming, like you said, the richest person in the world on paper, right?
And owns a network. And owns a network, and he can easily tap into a network of people. Owns that network. Apps on the phone can track location. All these different things, right? Like the ability to tap into a network that huge is unlimited potential.
You start to become too powerful, like. People are gonna come and we can't allow that. So we're gonna find every way to tear you down.
Hey, listen, we gotta face it, man. The new economic or the new world leaders are the tech leaders. That's who they are.
I mean, do you like that though? I mean, me, I think it's disgusting, but I found ways to profit off of it.
I think we have to adapt. Like at the end of the day, it's like saying. There's a big thing about AI and Chat GPT and just the ability to write stuff like, no one's going to write things anymore. They're going to, and like they had that same debate when calculators came into our lives, right?
Yeah.
But you just have to adapt. Are you going to be the company or the person not using a calculator? Meanwhile, everyone else is. You're going to get left behind.
You're behind, yeah.
You kind of have to.
I think it's all about a balance in that.
I mean, back in the day when they had when the first person discovered a sword or rocks and were able to do things with tools, either your tribe is going to adapt or you're going to get left behind. And that's why the Europeans, they discovered gunpowder, they ran with it and they left a lot of people behind. It's just it always goes that way, right? So like these are the newest technology, these are the newest tools. He or she who uses them the best or leverages them the best are going to lead the way into the future. Those who don't leverage it, they're going to get left behind.
Definitely.
I definitely feel like we're being pushed in this direction. We're being turned into data and stuff like that. Like I said, I don't personally like it because I think it could be used against us so easily. But like I said, I got into crypto early, 2013. I knew about Bitcoin was 2011 was $1. And I thought it was like laughable. I thought it sounded so stupid, even the name.
Bitcoin.
But I remember this guy's name is Da Vinci J. He was talking about gold and silver. I was all into gold and silver. And one day he started talking about Bitcoin, and he was like, he's a computer programmer, and he was talking about it, and I was just like, man, this is stupid, man. And it's 2011 $1. You know what I'm saying? So anyway, I watched it go up and down, go up to $10, crash to $1, and I'm like, damn, told you, bro.
So went up to cycle of Bitcoin.
Exactly. Went up to like $30.
Came
crashed down. $1 again. Told you, bro. Then it went to $100. And I was like, all right, I was like, this don't make no sense. Then it went to like $150, and then I was just like, I'm not gonna look at this anymore. Then one day, I think it was like 2 years later, 2013 December, it went up to $1,200. And then I was like, man, if I would have just bought $1,000 of that stuff, because I was investing like at least $1,000 a month in gold and silver, I'd be a millionaire. So from that point on, I learned as much as I could about crypto, and loaded up the truck. It went in 2016. It was like $250.
And went all the way up to 20.
Loaded up the truck. I was telling him about it, and he was like, just send me the website. Send me the website. I was like, send me the website. But but I mean, there's so many opportunities in crypto, but I think all of it's going to lead to a digital currency.
Correct.
The big crypto, that I'm investing right now is the Flare. I don't know if you heard of that one. It's a Flare currency that actually gives you digital return every month. So look into that one. Go ahead.
Oh, you done?
Yeah, I'm done.
Okay. Let me ask each of you gentlemen, like your top stocks that y'all will recommend our viewers to buy and hold or trade.
That's a good question.
I'll start with Apple. I love Apple. I'm just from a technology standpoint.
Do it like an order from like 10 to number 1. That'd be cool.
I don't have 10. I'm not as much of a trader as these guys. I can speak from just.
Okay, do your top 5 then. Top 5. That's cool.
Okay. I can't give it to you in order though.
Okay, that's
Because
cool.
I'm just not that as into it. I don't want to. We try to be real authentic, but from a technologist, from someone who uses these technologies on a daily basis to build platforms for clients to make ourselves better, to scale our business and other people's businesses.
Okay.
Microsoft is up there. Apple, Tesla. I love Tesla from a software data standpoint in terms of all the research they were able to put. They've kind of been on AI. I think they have a really huge lead against a lot of these other companies. So Apple, Microsoft, Tesla. I love the Trade Desk, TTD. They're tied into like streaming. Advertising, and the more we utilize streaming, I think is pretty big. And my last one, Amazon. I love e-commerce. I think the more they put a lot of money into their operations. I think they also are kind of building themselves up internationally as well, and I just love tech companies that also spend money on research and are planning for the future. So, don't be surprised you see little helicopter drones coming to your house, dropping your stuff off like an hour after you order something. I really like Amazon.
All right. I would say NVIDIA.
NVIDIA?
The NVIDIA.
Okay.
Yeah, NVIDIA. Tesla. First of all, you're going to hear us say a couple of the same ones, but these are the ones that I definitely...
Do you recommend buying NVIDIA right now, or you think it's going to drop more, or you think it's going up?
So NVIDIA is, a part of the S&P 500. We're starting to trend up and test some highs. So I would, because it's at an extreme haircut right now. So I would invest in it long term. Absolutely. So NVIDIA, Tesla, AMD. AMD. Personally, again, I'm going to be involved in terms of trading and investing in all equities that are a part of the S&P 500. Home Depot. I will go Home Depot, and my number one is the S&P 500, the SPY. Okay. Number one, because from my perspective, it's all about risk mitigation and protecting yourself. So I would rather have a basket of equities, which is a sense of protection and leverage, and I want the all-star team. I want the all-star team. I don't want individual players. I want KD. I want LeBron. I want Kyrie. I want the all-star team, and that's what the SPY is. Yep. Those will be my 5, and you can invest in the SPY.
Go ahead, Ron.
Okay. As far as stocks, I like. Okay, as far as stocks, yeah, I like the S&P 500. Just because, like he said, that's your all-star team. That's the 500 companies that are gonna dominate the world, right? They make rules and policies for the rest of the world, in my opinion. As far as any other stocks, I'd mainly invest in the big ones, right? And then crypto, the main ones. I got like Bitcoin, Ethereum. I got this stuff called Flare that actually pays you every month or whatever. No Ponzi scheme or anything like that. You had to look into it yourself. XRP, have a bunch of that. Have a bunch of XLM. I'll just say some crypto in general. I don't advise people just to blindly get into it or whatever. But just like he said, it cycles. So you got to get in cheap, and then you got to wait for the bull run to happen. I had one that went from 2 cents. It was called Mana. From 2 cents, it went up to $5.50. So $2,000 went up to $500,000. You ain't gonna see that nowhere. I mean, I don't know how y'all invest in stocks and stuff, but you don't naturally see that anywhere on a one to like you without leverage. Yeah, what I'm saying? Without leverage, let's put it like that. Yeah. So
I'll give you my 10. I got 10. So we're gonna start off with number 10. Number 10 is gonna be Palo Alto Network. Ticker is PANW. They're in the cybersecurity space. I'm big as far as really when it comes to cybersecurity. Everything going digital, someone need to secure that thing, right? So security is number one. So Palo Alto Network is a leader in their own cybersecurity space. You also have other names like Zscaler that didn't make this list. CrowdStrike didn't make my list here, right? Okta, you have some other names there. So you can look at those. Those are all in the same sector. But I would go individual name PANW. This came off as high around $210. Currently trading at about I think it's about 138 right now. So they did do a split towards the end of last year. A lot of institutional investors piled in 2016, 2017. This was a stock that I missed originally, and one of those things I always tell people as investors: when you're given a second chance, take it. All right. So number 9, we're pretty much going to shift focus. I would say that the number 9 investment I would say is TQQQ. Let me break down what the TQQQ is. TQQQ is a 3-time levered ETF for the Nasdaq. So when the Nasdaq goes up, TQQQ goes up 3 times as much. When the Nasdaq comes down, it falls 3 times as much. So the Nasdaq fell 30% last year. TQQQ was down about a little over 70+%. TQQQ right now is about $20, all-time high of 91. So if the QQQ just goes back to 408, which is the all-time high, TQQQ will be $90. If you invest in it in the regular QQQ at $283 today, and price literally goes all the way back to 408, you don't even make 100%. The TQQQ can make you more than 100%, can make you 400+% if you look at it, because all you're saying is I believe in the Nasdaq. Same exact holdings, Apple, Microsoft are the top holdings in that. So that would be my number 9 pick, TQQQ. It's a little bit more risky, obviously, because it's a 3 times levered ETF, but it's one that I would recommend that people look at. After that, we're gonna go number 8. We're gonna go AMD. Advanced Micro Devices. Lisa Su took over this company in 2012 and completely shifted the entire landscape. And when you take a look at AMD from a CPU perspective and processors and chips, right, dominating, this company hasn't missed earnings for 5 years. So you think about the consistency of that. So I really like AMD. That's my number 8 pick.
Do you recommend buying AMD right now?
Yeah, I think a fair price right now. You're looking at it at 71. Price to earnings right now. Let me give you the exact price to earnings right now, which is PE, price to earnings. That gives you a valuation. It's currently $70.58. PE is currently 42. I would like to buy this sub 30 PE. So you're talking about maybe like 55.
55?
Yeah, so I would 55.
So wait till it drops to 55?
Yeah, I would look to buy this at 55. And most recently, I think the low last year was like 53. So if you can get this thing sub 55, sub 50, from a price to earnings standpoint, that's a fair value price to pay for this company. Okay. So that's pretty much my number 7 pick. Number 6, we're gonna move on. Ticker is BA, Boeing. When we think about defense, we think about government contracting. You think about overall security in this country. Boeing is one of those companies that I think is primed long term, right? You're seeing a lot more. They understand we understand the 737 MAX jet was grounded for about 2 years, but guess what? It's still rolling. It's back up. Business is starting to get better. They're gaining trust from airlines. They're gaining trust back. And I like things that has the government's backing in it. When the government dollars are backing and putting the battery in your back, that's something I can rock with, because I know that people are sitting in Congress will pass laws to make sure you're taken care of.
Can't fail.
So you can't fail. It's a business that can't fail. So that's ticker BA, Boeing, located in the Dow 30. Number 5 would be United Healthcare. That would be my number 5 pick. United Healthcare has really gapped up over the past couple of years from $200 a share to $500. But tell me, was the last time that you've seen someone not get sick? We got a lot of people with health issues happening. A lot of healthcare is only the cost of health insurance, all that stuff is only going to get more expensive. Healthcare is recession proof. Ask yourself, was United Health negative last year? I can already tell you it wasn't. It was up 7% for the year. So United Health is another name. It's number 5. It's the top stock in the Dow 30, the 30 most valuable companies in America. So I really like United Health, and that kind of gives you like a balance act. Number 4, I would say for people to invest in a regular QQQ, right? It gives you exposure to the NASDAQ index. Obviously, not as risky, but it's a safe bet. I want the all-star team per se, just like you guys said. So you can either go SPY or QQQ and get yourself an all-star team. Number 3, I'm going to go out there and say it is Tesla. Number 3 would be Tesla. I know some people probably like, oh man, he didn't put Tesla as number 1. But Tesla's number 3. And the reason why I like Tesla at number 3 is because I just think overall, when you take a look at it from a price standpoint, price fell from 400 all the way down here to about 102. right? And from a price to earnings standpoint, right now, I think Tesla has a PE ratio. Let's check it. Currently, price is at 127. Current PE ratio, this is 39. So
what's a normal tech PE?
15. You want to see 15 to 30. That's an industry average. You want to be able to see 15 to 30.
I know 15 for like normal stocks, but for tech,
yeah, in between 50, it can be above 30, right?
Yeah.
Don't get it twisted. It can be above 30.
Yeah.
But that's why these stocks have fallen over the past couple of years, right? Because they had PE ratios. Some companies have PE ratios of 200.
Yeah.
Amazon had a PE ratio of 100. Amazon, the company Ivan mentioned, had a PE ratio of 100. Wow. So that's why its stock price fell from 170. I think it's currently at 95, right? Now it's trading fair, right? If you take a look at Meta Platforms, it was, super overvalued. So, I really like Tesla at number 3. Number 2, I pretty much say this, man. Number 2 is going to be Microsoft, right? You can't go wrong with Microsoft, man. Consistency. You take a look. I like the moves that Microsoft has been making, getting Activision, right? I know they're trying to work on getting that deal through. Investing in open AI. I like the moves from a consistency standpoint from Microsoft. So number 2 would be Microsoft. And then number 1, man, you guys know Apple. Apple, man. Apple, man, dominating. I know the stock price obviously hasn't done anything over the past 2 years, but sometimes you just want to be in something that's a safer bet. So if you looked at how I just structured the entire portfolio, the top 5 things in there are safer. The bottom 6 through 10 are more so a little bit more risky and growth. So that's how you should portion your portfolio. You should have more money in the things you're more sure about. A lot of times what I realize about investors, they're doing the opposite. They're having Apple as the number 10th holding and putting with my number 10, you're putting that number 10 at number 1. And if that number 10 goes wrong, right, like a Palo Alto network could go completely left, your portfolio is going to be destroyed. For the people that invested in outside of Tesla, that was number 3, anything else right there in the top 5, your portfolio is not down that bad. United Health didn't drop last year. The QQQ wouldn't have you sitting there saying, man, I'm losing all my money. Tesla was the only name that was in the top 3 that really dropped significantly. So that's my top.
That's because of Twitter, though. He's been
and so think about it. Yeah. It took him to buy Twitter, actually, because if we really want to be technically speaking, Tesla never really dropped until he started trying to go really get Twitter. Facts. Tesla was still at $314 in August of 2022. When other tech stocks were down already 60, 70, 80%, Tesla was only down a measly 20% from all-time highs.
Did you know it was going to go down by looking at the charts?
Oh, man. We could see supply zone sitting there right at 3.
Panther was calling that.
Yeah.
Do y'all look at volume, or do y'all look at lines and stuff like that?
I primarily, and I wish we had a chart, but we don't, but I primarily look at volume, right, and also looking at levels. So I identify zones on charts.
You looking at fib levels?
He does fibs.
Oh, okay. I try to do that. It's just like
I don't do fibs.
Yeah. Okay.
Well, historically, there's no stock that has done a split that doesn't suffer a pullback.
Yeah.
None. So that was coming regardless. Whether Twitter, all of that is crap. The institutions are going to take it.
I think it's hard to tell when, though.
You could use fibs, man. You could use fibs.
I mean, I think it's just like when I see people pulling them up, it's just like it looks so confusing.
You can see a lot of stuff on the monthly and weekly time frame. It's like Jamil
monthly,
said,
weekly,
It's like Jamil says, train your eyes. Right? You can train your eyes to see stuff. Everything that happens in the market, I would say that you can see from a chart perspective before anything happens. Now, you're going to be able to say to the T, to the exact maybe tick. Well, if you're a Jamil, you probably can, but but to the tick, this guy, I'm telling you, is crazy when it comes to technicals. But you can see market phases, right? You can see something going from an accumulation phase to a public participation to a distribution, and that's really all that's happening. Right, all of the big dogs, right? When we talked about the wealthy people, right, that are not on paper, they're the ones who are selling to the people who are just listening and buying a course and just thinking, "Oh man, I'm gonna be a trader and investor." It's so many people who bought at the top, and one message that I want people to really stick with people is like, "Yo, everyone wanted to buy when everything was hot, but." I want people to have that same enthusiasm when they go into their favorite store and they see their favorite items on clearance.
On sale, yeah.
If people took their shopping behaviors and brought it to the stock market, they wouldn't fail. Because I always tell people, it's like, oh, well, I don't know how to evaluate a company. You know how to evaluate a product. You know that this product is better than this. You know that this brand of this coffee maker is better than that brand of that coffee maker, and the quality. So why can't you figure that out between a stock that might be in the same sector?
Yeah.
Right. But it's just about the willingness to want to. Everyone wants answers and stock prices and be given, oh, I'm going to tell you to get in here and do this. None of that's going to work for people. You got to put in the time.
That's dope. Because like real life, man, think about it. You see a pair, if I see a Louis Vuitton purse for 75% off and I'm certain this is real, this is legit, I'm not calling I'm not calling my wife asking her if she like it. I'm just getting it. It's value, right? I know she might like it or she may be able to resell it. But then we see Tesla at 75% off, 80% off the stock. And it's like, oh man, is it worth it? Should I get it should I wait to get it a little bit lower? Like,
that's a good point you brought up, because just like Louis considered couture, right? So they would never have a sale, right? There's some stocks in that market that haven't sold off for years. Look at stocks like Equinox. We don't even know what that is, but it's $1,000 stock every time. Look at companies like Sam Adams. You know, all these companies that institutions prop up.
The Domino's Pizza.
Yeah, Domino's Pizza.
Chipotle.
Yeah.
Oh, my 5 is yeah, I mean, you guys, you know, we pretty much
hard to follow. Panther gave a strong
no, it's
10
not that it's
list.
hard to follow up, because I got some things that I'm looking at. Like, for instance, my number 5 would be
Bring the mic
CrowdStrike.
closer.
Oh, mic a little closer?
Yeah, that's fine.
Is it good now?
Yeah.
All right. So, CrowdStrike would be my one. I understand, you know, Lawrence's sentiment on it, but I like CrowdStrike because there's plenty room for everybody to eat in that cybersecurity world.
Definitely.
Because there was like $3 trillion in cybersecurity theft this year alone. It was pretty big. So they need somebody to go out there and prevent that from happening. But more importantly, from a charting standpoint, CrowdStrike is sitting right now in a weekly demand level.
Yep.
So that's my signal to buy. I know that weekly time frames, monthly time frames are where institutions play around that, right? That's Jamil's language over there. That's the, you know, but at the end of the day, those two things align for me. They've never not really been profitable. They're a great business model. Of course, Palo Alto Networks got the jump on them right now, but like I said, you know, Burger King and McDonald's will eat.
Yep.
And Domino will eat better than both of them. So that's my number 5. My number 4 is Enphase. Yeah, EMPH. And the reason why I like Enphase, because everybody's taking Enphase as an energy play right now. Enphase ain't going to come down hard like energy, because for one, it's not in the energy sector. It is a solar energy company, but it is not in that energy sector.
I got a question about that. Do you think it's going to drop because with the housing market, or you think it's just going to? Because I bought in when it was like at 200 like last year. But do you think it's going to drop? You think it's going to stay in the 3s, or you think it's going to drop back to 2s?
No, it's going to drop. It's going to, because it was on its way now. So it's definitely going to drop. It's going to have its swings. Institutions are going to play with it, you know, keep us on a rope and take theirs from get in on the bottom and get out at the top. They're going to continue to do that, but it's a good company. If you look up the balance sheet on Enphase, they've been profitable because it's not just about the houses. It's a lot of other companies, like Tesla's supposed to be having something going with Enphase. It's a lot of other, you know, components that they have to their business. Tesla would be number 3.
Okay.
And a lot of people, you know, if they watching this and they know me, they know I probably would have said Tesla is number 1. Like I said, that's always been my favorite stock, one of my favorite guys. But Tesla at number 3 because I don't like the second split. I don't like it.
Yeah, I feel like it was super premature. I agree with you.
Yeah.
It didn't make sense.
Yeah.
You just split the stock, and the stock didn't need to be split.
It didn't need to be split. I don't like that. It slows up the
movement.
The movement.
Yep.
There's more shares out there. Take more money to make the price move
Exactly.
up or down.
Oh,
I used to make so much money off Tesla from a swing perspective, bro.
So y'all don't like splits? I don't know. I thought it was a good thing if you had it.
Think about Apple. What has Apple done since they split?
I don't know.
Nothing.
Yeah.
See, the more you split, the more shares you have in the market.
I figured people thought it was cheaper, and they're just like, "Oh, I got $100 worth of this."
But it's like it's like I even don't really like the Amazon and Google splits. Like I think they could have split, but I'd rather would have them done a 5-to-1. To do a 20-to-1, you're putting 20 times the amount of shares out there. Think about Amazon and Google ain't done nothing. they move they move slower than a turtle.
Yeah.
So my next two would be triple Qs.
Triple Q.
The SPY is number one.
Yeah.
And the reason why I'm telling people the SPY is number one, because we're about to see some more downturn in the SPY.
Okay.
Right? Over the next coming months. It's not going to happen next week.
Uh-huh.
But that SPY is going to go back down there and test some of those lows, 370, 348, and there's something under there that it hasn't been to yet. So if you're looking at that, like Jamil said, that's the all-star team. That's the top 500 giants in the world.
Yeah.
So now if you're in that ETF, right, not only is it a good cover call play, right, not only is the SPY good for options because it has 4 different expirations throughout the week and you can capture small time frame gains on the 1 minute time frame that Jamil trades off of every day. But it's just it's highly liquid, right? Because it's the most participated market in the world. Like that's what everybody's participating in. Triple Q, same thing. You get exposure to all your top growth stocks. If this market is coming down like it is now, you know, and you want to ride that thing back up, then those are the things that you want to be in. Get yourself some exposure to all of that, and then have your couple on the side. That's your growth prospects that's going to run. But always wait for pullbacks. I mean, depending on your time horizon, if you plan on holding, I forgot the stock you mentioned, AMD.
Yeah, AMD.
If you plan on holding AMD for 2, 3, 5 year time horizon, then yeah.
Okay.
But if you planning on dumping it in a year or two, then you probably want to wait for a pullback, get you a nice price.
Well, I'm gonna ask everybody to plug themselves in, like your Instagram handle, and then promote the summit here in Houston.
Gotcha. Hey, well, listen, I'm Santino, the only option again from Wise Money Academy, sitting here with my brothers, The Collective. Listen, Houston, come on outside, man. We got The Collective, the Wealth Commitment to Wealth Tour, hosted by us, The Collective. 4 individuals that came together with 4 different skill sets to bring you value. We created a program that's amazing that we stand by. Because like the big thing that Lawrence said, right, we really do this. And it's a lot of people out there that's educating, but you ain't seeing no evidence that they actually do it. You see what I'm saying? Like how many people actually showing you trades besides this group that's in here right now, popping their top on their laptop and opening those charts and talking that talk. It's not a lot of people doing it, and I think that's what our niche is, what stands us, you know, apart from everybody else, man.
What's your Instagram?
At Wise Money Academy.
Okay.
What's up? My name is Ivan Lee Jackson. My Instagram is at Ivan Lee Jackson, IVANLEE Jackson. I'm CEO, co-founder of Optimized Funnels AI. My passion is to help transform people in our community into tech entrepreneurs, try to help you guys understand the ability and the leverage you have with technology and how easy it is to get your business online, to do things online, to make money online. It's not that scary of a proposition. It's extremely empowering, and I'm just all about sharing that transformation, that path with others. And so if you have any interest in doing that, tap in. Other than that, success is collective. We are the collective. Let's tap in.
What's up, y'all? This is Coach Jamil, i.e. Coach Jamil. That's my IG handle, Coach Jamil. 1/4 of the collective. I'm just showing everyone that, you know, time in the market, it could be done. I'm serious with this chart game. So, you know, tap into the collective. We here in Houston, Texas. Come out. We're going to be doing some live trading. Want to show y'all how you could take money out of this market every day, extract money out of this market on an intraday basis and a swing trade perspective.
Yep, and my name is Lawrence Eggleston. Another 1/4 of the collective. 23-year-old, started trading and investing at 16. Make sure you guys come out. We're here in Houston tonight from 6 to 8 p.m. and then also tomorrow 8 to 11, showing you live trading, showing you exactly what we do, what's our systems and processes, and why. Now's the time, man. Now's the time. Don't allow this bear market to fool you and think that, you know, if you lost money in years past that you can't get it all back plus some this year, right? So it's about being consistent and being patient. And, you know, that's what I always lead with. Patience pays. If you're patient, you'll be paid. So simple. Thank you.
No doubt.
I appreciate you fellas for coming out. Thank you so much.
Hey, listen,
Hey,
we
thank you.
appreciate y'all,
Right.
man.